Hello everyone and welcome to my morning report analysis videos on Tuesday 28th of August with me, Richard Perry, market analyst at Hantec Markets. We've got a degree of dollar correction that has happened in the past few days. That's sort of come on the back of the speech by Jerome Powell at Jackson Hole, that renewed sort of downside move on the dollar initiating on the back of that speech. And that's sort of consolidated a touch today. And that's come on the back of the announcement by Donald Trump of this trade agreement between the US and Mexico. It's difficult for the market to know exactly how to take this because I think if you sort of look at it, the fact that US has taken a trade deal with one of its trading partners that it's had some issues with, I think that can potentially be conceived as a good thing. However, you look at it on another point of view and you think, well, they're going down a bilateral route, which is sort of coming away from the general sort of feeling of trade agreements in concert. Such as NAFTA, for example. Where does it leave Canada, for example? Also, going forward, what does it do for the China agreement? Does it give the US more leverage over China? Possibly. Trump's already come out and said that it's not time to talk with China at the moment. So that again, that sort of doesn't look all that great. So the fact is that in recent months, the dollar has strengthened on emerging market fears and weakness. And so the market has sort of not really known exactly how to take this today, and subsequently the dollar's basically flat. Yields are marginally higher. 10-year Treasury yield sort of pulled a bit higher yesterday into the close, but sort of consolidated a bit today. But you look at how the 2 years up, that spread between the 2s10s continues to flatten 19 basis points now, ever closer towards a flat yield curve in the US. Now, how's this impacted on on equities? Certainly, big upside break on Wall Street on yesterday, gapping to all-time highs. That's an incredible move. So yeah, really strong move on S&P 500. Not necessarily continued today, although just a tick or half a tick higher on the S&P 500 futures there, towards 2,900. And you've got sort of marginal gains in Europe. FTSE is playing catch up, so that's not entirely the case of taking FTSE as a gauge today. But yeah, European markets are sort of basically higher, but European markets saw their strong move higher yesterday, really. But generally speaking, we've had this the dollar move, and is the key thing to look out for. How sentiment is gauged around this US-Mexico trade deal, and whether it heralds a sea change, really, because the dollar has come under pressure, broken that uptrend since Powell. So the fact that the dollar's basically flat, the next direction goes from this could be a key guide as to whether the corrective move is going to start to develop on the dollar, whether it's actually just a consolidation. So in terms of data points today, we got a little bit of sort of minor US data. S&P 500, S&P K-share house price index expected to stay flat at 6.5%. Where are my data points? 6.5%. Consumer confidence US marginally ticking lower, 126.8, and also the Richmond Fed composite expected to tick marginally lower to 18, but still very strong. That would be. So my chart today is sterling Aussie. Now sterling remains the sort of generally remains the key underperformer in major markets, and you can see that through the sterling Aussie moves. We had a bit of a rally last week, but a big turnaround on Friday, and that turnaround has yet to be really sort of regained again, has it? It's sort of marginal loss yesterday, but sort of basically flat on the day. Again, sort of all but flat on the day today. So we've got this downtrend that's in place, 4-month downtrend, sort of 3-4 month downtrend. But you look at the momentum indicators. RSI sort of failing around that mid-50s area. MACD lines, well, stochastics crossing lower. MACD lines not really making too much of an advance. So it would suggest that this is around a crossroads, I would say, with the fact that we're sort of moving higher in the near term basis on a sort of a couple of weeks, sort of higher low, higher high, but failing at that downtrend, failing also around an old pivot area as well, which gives you sort of resistance around the 76.80, 76.90 area. And I think it's coming to a head, this chart, and I think it's one to watch in the coming days as to exactly whether it breaks this downtrend, goes to the upside, or breaks the uptrend and then resumes that downtrend lower back towards 72.80. So it is a key move. I think in the coming days we're going to be waiting for. I think the initial level to watch, I think, is from yesterday's candle, 75.80 resistance, 75 figure area as support. And 75 figure is basically where that uptrend comes in now. So I wish you good luck in your trading today, and I'll speak to you later.